Yo, it's Marcus Shaver here. In this video, we're talking about my 2 easy money plays. And are they still easy money plays? And how have they done so far with the S&P 500? And how do I see them going from here? So the first easy money stock. So this was the easy money stock video here. This was December 24th. We talked about Salesforce and Johnson and Johnson. So if we look at the first stock, Johnson and Johnson right here, if we look at the 24th. So if we see the 24th, which was right around here, and we can see that so far, we've done pretty well, it looks like. We went from, I'll try that again, all the way over here. We made a gain of over 10%, or 9.25%. So not too bad for Johnson & Johnson. And how does that compare to the S&P 500? So the S&P 500 from the 24th, right over here, we can see that the S&P 500 had a gain of 6.41%. So not too bad for the S&P 500 during that time period. But then how about Salesforce? So Salesforce from the 24th, we can see that from over here, Salesforce had a gain of 6.46%. So barely beating the S&P 500. So Johnson & Johnson definitely handedly beat the S&P 500. Now the question is, does Johnson & Johnson have more room to run? So in my video, I'm pretty sure I mentioned that the target that I was kind of eyeing for Johnson & Johnson was basically going into a new range and hitting around 175 bucks. So we can see the 52-week high here, which happened probably on this day over here. We hit actually $173.65. So this was basically $1.35 below my target of 175. So we hit this range, and my idea was basically we would make a new high, consolidate in that new range before, going to the upside or going for a pullback, something like that. So because we see in this past year, basically we have this consolidation before a new leg up, just like we had in the past. So we have this consolidation before this new leg up here. We had a new leg up in the past, consolidated for quite a while, and now we're seeing this new leg up again. And now, are we going to consolidate for quite some time? Just like over here, we consolidated for quite some time here and kind of had this another leg up and kind of had some pretty significant movement to the both the upside and the downside. So for Johnson & Johnson, we had our significant move to the upside, and now I see more consolidation. I don't see massive upside in the near term. We could definitely go back to 175 or even a little bit higher. Maybe we see 180, especially if we get positive vaccine news and the demand of that rises. But to be frank, I'm not so optimistic in too much upside for Johnson & Johnson, but I just see more consolidation for Johnson & Johnson in the near future. But at the same time, Johnson & Johnson is a core holding in any portfolio. It has a nice dividend, so it's just a nice thing to hold. But if you wanted to trade it out for something that was going to give you more return, that wouldn't be the craziest thing to do. And on the other hand, Salesforce, in my opinion, has a lot more room to run. We were eyeing this $238 level, basically where this gap fill would have been. We filled that gap, and now I expect us to continue to go to the upside. And I expect us to go maybe 246, 247, basically to get it up around there. That's kind of my next area I think we're going to go to. And I see significantly more upside. And I see the next big catalyst for Salesforce being the earnings. And when I see earnings coming up soon, that's going to be the catalyst that launches them up even further. However, obviously, if they have a massive run up to earnings, that earnings obviously could put some of the air out of the stock price too if we do have a massive run up for earnings. Again, these two stocks, I don't see some crazy volatility. I just see some pretty solid plays consistently going up and both beating and outperforming the market this year. And a few bonuses here. Metro Mile, we have seen a pretty significant increase here. When I made my video the day or two after, up until now, we had a 35.46 gain, and they also just recently merged from INAQ to Mile, so that's pretty cool there. And these are my gaming portfolio progress here. 2021 for me has been a year of cryptocurrency and of gaming stocks, and these are the performance I had for gaming stocks, and these are the holdings I have in the crypto space. So Bitcoin, Mara, RIOT, Litecoin, Ethereum, and Grayscale Bitcoin Trust. I do have a couple other minor plays. I have a little bit of Bitcoin Cash, and I do have some Dogecoin. So those are some other plays that I do have. And lastly, if all coins were EV stocks, this is what I would list them as here. So you can see here, this is just for fun. If you want these kind of updates in real time, definitely follow me on Twitter. And I'm just going to end this right here. And I hope you guys have some value from this content. If you haven't already, smash that like button, subscribe to this channel for more content like this, and I'll catch you guys in the next one. And keep in mind that none of this is financial advice. This is just some random guy on YouTube drawing some stick figure lines on a chart talking to you guys.